Ladies and gentlemen, Greg Michalowski from ForexLive.com. This is a Kickstart video for January 11th, where I take a look at three of the major currency pairs: the euro versus US dollar, the dollar versus yen, and sterling versus US dollar. Today we have the joy of having the CPI data help us define the bias or not. And it came out a little bit stronger than expectations as per Adam's post, sort of previewed that a little bit. But we'll see the what the technicals are saying in this video report. So let's get going. All right, the buyers of the euro versus US dollar, sellers of the US dollar, were hoping for a move to the upside. Pre the report, the price had moved up toward this high price that we saw in trading last week. And the price, though, found willing sellers against at 109.98 level, 110 level, nice little natural level, and the price started to move down before the data, and the data sent the euro versus dollar to the downside, the dollar higher in the process. We also moved below the 200-hour moving average and the 100-hour moving average. The price has been above and below these moving averages since the report, but we're currently trading within those moving averages at 1.0956 currently. So we're in a neutral area from a technical perspective. We also fell back below the 38.2% retracement on the move down from the December high right here to the January low right here. The level comes in at 1.0976. And all these technical levels, the 38.2, the 200-hour moving average, 100-hour moving average, now become barometers for more bullish or more bearish. If the price were to move back above the 200-hour moving average and get above the 38.2% retracement at 1.09768, then that would be more bullish. If the price were to move back below the 100-hour moving average and stay below that level, we have been below it, then we'd look for further selling pressure with 109.29, a potential level. That level, recall, goes back to this area right through here. Back here is what I'm talking about, where we had a different swing highs here, and then we created this floor here before moving to the upside, and we rotated back to the downside. And you can see that although we had these little tails through here that went a little bit above it, a little bit below it, the price has largely been more bullish above, more bearish below, and we did have some sloppy market trading through here, but we did reestablish support here before moving to the upside. So that 109.29 level is going to be a key target on the downside. On further selling pressure, we'll see what happens, see if the dollar does get stronger after this report. Let's take a look at the dollar versus yen next. And this currency pair did move up to a new high after the report, and in the process, I'm going to put this on the 4-hour chart here. We moved into this swing area through here where we had different swing lows and swing highs going back in time. More specifically right here, I'm going to get on the arrow. We fell below that level, and then we tried to move above it and use this area as a support through here and resistance through here before moving to the downside. And it's not the best of levels, but we also did move up to this high area in trading last week before rotating to the downside. It's also near the 50% retracement of the move down from the November high down to the December low. So all those things come into play right through here between the 145.96 and 146.22 with the 50% at 146.07, and the high price move just above that 07 level in between the 07 and 22 level on the top side before rotating back to the downside. So we are back below this level, but we went and tested it. And the inability to move above that level, the sellers against the 50% or near the 50% retracement give the sellers a little bit more or some hope. Let's just say that. But the dollar versus yen has certainly been more bullish of late, and you could certainly see that on the hourly chart. I'm going to put it just for jokes here, giggles and stuff. I'm going to put a Fibonacci from this low to this high right here. And just to gauge the retracement here, and the price did move below the 38.2% retracement, but stayed above the 50% retracement on that corrective move to the downside. What is also important on this is that you see this green line right here that represents a 200-day moving average, and the price on the dip on the corrective move here before moving to the upside starting on Tuesday, Wednesday, and again today. We did find support against a 200-day moving average. So buyers are still in control, but watch this 50% retracement at 146.07 because that could still put a lid on this pair and cause a corrective move to the downside. So we do need to get above that level. Finally, let's take a look at the sterling versus US dollar. And lo and behold, the price came down to test its 200-day moving average and 38.2% retracement of the move up from the December low to the December high right through here. As people to my videos know, I've been somewhat kind of off on the sterling versus US dollar. Lots of choppy price action. You can take a look at that trading range. You can take a look at this trading range as indicative of the ups and downs that we've seen in this currency pair. And the high price today did try to extend above the high prices right here and here. And it did, but the market quickly reversed back to the downside and down to that 200-hour moving average, 38.2% retracement. So this is going to be our barometer. This level, this level right here, for more bullish or more bearish in trading here today. If the price moves below the 127 level, it's more bearish. If we stay above it and we get back above the 100-hour moving average, that's this blue line right here, we could see more corrective moves to the upside. We will see. So there you have it. Look at the markets after the CPI data. My name is Greg Michalowski. Good fortune with your trading. Bye-bye now.